Welcome to another episode of the Elite Investor Show, where we interview some of Tampa's top developers, real estate entrepreneurs, and investors right here. David, we met in 2021. This is a special full circle moment for me. I bought one of your duplexes, and it was one of the most seamless, me feeling fair. I think you felt fair in the transaction I've ever done. And it's so interesting to me because I think in real estate and small business, sometimes we view as like the person on the other side of the negotiating table, like that's your competition. And I think we found a really special way to collaborate in that transaction, which has since led to a pretty flourishing relationship. It's been awesome to see you grow the past few years in your real estate business. You kind of launched a whole vertical based on what you were already good at. And one thing, you don't know this is coming, but one thing I'll share about David that I think sets him apart, which is a really unique attribute that I see very seldomly in other entrepreneurs, is that I think you're extremely patient. You're an extremely patient person. And as someone who is not at all, I'm extremely impatient. It's very admirable to watch how you've been able to create what you've done and weather the market doing what it's doing, challenging many investors, all with a sense of patience. So hats off to you. Oh. Hats off to you for that.
It's funny, sometimes you can think about that as a weakness as well. I think that's my day-to-day challenge is I see myself in two different speeds. Sometimes when I see an opportunity, I tend to be very fast. That's actually one of the biggest conversations with my partners is that, how fast I react to things, and sometimes it comes through, maybe I'm not thinking through the whole deal, but then I go and, I lead by numbers and I show them what I'm seeing. And at the end of the day, when I'm not 100% right, I try to stay back and listen and watch until I see the right moments. I think, especially the last couple months, last year, we have been really waiting for the right, with the right thing at the right time.
Yeah, I think the person who has cash ready to go and can have a patient business thesis but doesn't need a deal to make things work, that's a pretty lethal combination in my opinion. So that's a really good thing. Let's go back to your first steps into Tampa real estate investing. When you got started, what year was that? What did that look like?
My first home was 2010. That was my primary home.
Yeah.
I grew up in Ecuador, in South America. My dad is an architect. So I was exposed throughout my childhood, going to the different construction projects, seeing how it was done back in the day. They build like scale models and so on. So I always had that little affinity for real estate.
Yeah.
I was very blessed and lucky that I was 26 years old when everything happened with the economy in 2008. I was just starting my full-time job, so I didn't have any real estate at the time. I started when everything was going down. I think a big part of that is timing. I always say that I'm thankful for the growth that we had in my portfolio throughout the years, but I cannot take 100% of the credit because that's also been luck and timing. I started when everything has going up. I think that patience that we're talking right now also has been very in line with what happened in the market as well.
Yeah.
But that was a time that everything was still gray, and that's when I started to do in real estate. So I think my first investment property was 2013. My boss at the time, who is a good friend and my partner and my mentor, he actually started talking to me about on the real estate side from the numbers point of view. I think I've always been good with numbers.
Yeah.
I think one of my strengths is I'm very good at identifying trends. I look at data and I look at stuff that is happening. And, we were investing in north of Kennedy when everybody was saying, you should not invest north of Kennedy. That was back in 2014. But then I was seeing the trends of the student population and UT growing with not enough housing, and everybody was investing in multifamilies, and we were investing in single family homes, or maybe a duplex. And our business model was, how do we differentiate from the rest? And it was making premium units at the time.
Yeah.
So we started in 2013, then that was our first duplex. We didn't do anything, actually, we did a flip. Then we started going full force 2016 until 2021, 5 years of just buying and holding.
Yeah.
Properties, single family homes, mainly small multifamilies and land.
And they're all in areas where you thought they would come up quite a bit.
That's correct. So we are always in, we started in NoHo, 2014, where literally there was only 5 homes from Domain. They just started. And I kind of follow some of what the big developers and the construction companies do.
Yeah.
So I saw Domaine Alenar working on there. That was 2014. Then we start buying stuff in 2017 in West Tampa.
Yeah.
So I bought land there for $85,000, you know, full houses for $90,000, you know.
Yeah.
But it was not the place to invest. You know, everybody was like, "You're crazy." But then I do follow what I call like a geographically growth. Like I saw what was happening in Tampa, downtown specifically, how private money was coming in.
Yeah.
And then I said, you know, South Tampa is so expensive. You know, where is the money? Where is the investment going to go? And I said, NoHo makes total sense. When NoHo started getting expensive, where is it going to go? Well, West Tampa actually makes sense. But then there's all this investment with Rome Yard and everything that you know. And I saw what Tampa was doing instead of expanding. So we were always going into these neighborhoods that we think it was going to be the next place. It is a big risk. You know, it could have not happened. Like I invested in Palmetto Beach, and it's not happening.
I think that's a little hidden secret, though. I think the prime for that area is to come. Do you still have the property?
We got 3 properties in there.
So let's talk after. Send me those. I think there's some creative stuff that you might be able to do over there.
Yeah.
Send me those.
I was excited last year with the news about the 20 plus million, but I also read that it's on hold now.
Yeah.
Because of the hurricane, and they have to reanalyze everything now.
Yeah.
With the height of the seawall and so on.
Yeah. Yeah. So what's interesting is 9 years later, we have the benefit of being able to look in hindsight and look at the result that you got. So how did all that go? I know the answer.
Like, how do we get to this place in the last 9 years? Or?
Well, so
that's going to be a parenthesis here.
in 2013, in 2016, you're like, hey, let's hit NoHo, let's start hitting West Tampa. And I shouldn't say hitting, I should say like investing. Like you truly are investing not just your money, but your time and your focus and your energy into beautifying these communities and making inhabitable units that residents love to live in. So let me just mention that. But we now know the result that you got from investing in those areas. Was it good or was it bad?
Oh, just definitely really good.
Yeah.
And I think that goes into, different concepts, but one of them that with my partner have been really passionate about it's how do you build wealth?
Yeah.
It's not about cash flow 100% of the time. It's also thinking about the wealth is being done through, holding properties, through the equity growth, through the really appreciation of the property throughout the years.
Yeah.
And you have to be patient for when you're going to get out. That thing now that you're saying, it makes a lot of sense. We've been waiting on this Rome Yard project for many years.
Yeah.
We're starting investing since it was an idea. And I drive by every day that I can and see progress. There's progress. Okay.
Yeah.
So we continue to find deals and try to invest. But if you're looking for something to be done in 1 year or 2, yeah, that's not your business model.
Might not be the right fit for you. I see high income earners, entrepreneurs who might be making good money in other industries try to come into real estate and invest, and it's like they have a misconception that's like fast money. And maybe they're making $1 million or $500,000 or whatever in their business, maybe doing high ticket sales or whatever, insurance or something. They're like, oh, I just want to make, I want to make this return. It's like, I want to make sure if you're looking to consult with me and you're asking for my advice on this, like I want to make sure you have the right mindset that this sometimes is a patient man's game. And if you can't weather some setbacks and some obstacles that you will have to overcome between now and getting the result that you're saying you want to get, like maybe don't consider real estate investing, man. It might not be for you. So,
yeah, it's very different speeds and I think decision-making process in some of these cases. Like, this personally, but I pretty much operate 2 full-time jobs.
Yeah.
I got 2 phones because of that.
Yeah.
One is my fertilizer trading job that I've been doing for 17 years, and then my other full-time job is the real estate that I do on a personal level on investment and also on the rental side with my company.
Yeah.
And they operate at totally different speeds. They operate at totally different levels.
Yeah.
From the invoice size, this one does, $250 million invoice, and then I have to switch my hat, and then I'm looking at, $3,000 rents.
Yeah.
We do all these deals.
And that was billion with a B.
Yeah.
Billion, $250 million. Yeah, because that can, all right.
That's, $200 million just in invoicing on that company.
Yeah.
And so the level of mistakes and the level of risk that you take on that business are totally higher compared to what I do on the day to day. However, the other one is something that I'm very passionate that I've been doing for many years, and it requires a whole different set of skills. I try to manage both in different ways, but at the same time, they always come to a certain point of decision-making process.
Yeah, so something that I think it sounds like you're describing that I'm a big believer in too is the principle of asymmetric bets. So like you talked about, hey, going into North Hyde Park, going into West Tampa in 2013 and 2016, it felt at the time like a risk. But whether you realized you were doing it or not, maybe we realize it now, I presume you looked at things through the lens of, hey, this upside, might be $100,000 on this one project, and it's probably an 80% chance of me getting it. And the downside is maybe a 20% chance that it comes down, but it's only $20,000 or $30,000 down. So you have both the majority and an increased amount on the upside, as well as the minority on the downside and a smaller reduction on the downside. So that's a textbook asymmetric bet, which I'm a big believer in.
That's correct.
And so one thing you mentioned that the speed at which we operate, it's been something I consider a lot this year, and I think I attribute some of the success that we've had in our development business to that. Can't be just that. I have an amazing team. We have like really dialed in processes. So all that, that's great. But something I've tried to think about a lot more this year is the speed. Let me explain. I think it's really important that I know the areas I can go fast, and I do go fast in those areas, but then I also know the areas I can't go fast, and I avoid speed in those situations.
Okay.
Because I think, like especially in development, you can rush into bad decisions. I've done it before. Last year we finished a 3-story home on a street where there's only 1-story homes. I rushed into bad decisions because I was like, we still made a little bit of money, so it wasn't the worst thing ever. So the project overall was profitable, but I rushed into being like, let's optimize our dollar per square foot. So that was like, looking back, you got to learn from those missteps, right?
I got a big one myself, actually.
Let's hear it,
We invested in 2021 in a historic home. You know about this one. I still love the concept. It's 3 blocks from Sprouts and Armature, but we had no knowledge about how difficult it is to do historic homes. And that goes back into having the right team as well, the right network. We hired at that time an architect who is very, very good at it, but he led us only to the first part, which is getting the permits approved and the whole concept. But once you start getting into historic homes, it's just not your day-to-day remodel. There's so many things, so many steps, and there's so many, I guess, bureaucracy as well as to the different things that you have to fill. But it's been 3 years now, and we still haven't moved forward, because then you get into different analysis. Hey, how about we try to turn it down? No, you cannot. It's actually a residential multiple. We could do 2 townhomes. We're surrounded by townhomes, but it's a protected structure. You cannot do it. So 3 years later, now goes into patience. We are in the right time. It's the right area, but what did you do? And then we still, I think, right now probably a little bit on paralysis by analysis, which is hard. When you're a patient, you get to that point of, sometimes I say, hey, do I liquidate and then just, take a profit because we did good on the buy, or we go and develop?
It's hard to lose money when you sell at a profit.
That's true.
You can't lose money.
Well, that's one of buying low. It's where you make most of your money. It's not on the selling side.
I focus most of my attention on that.
So it's one of those things that we had a very good entry point. If we sell it right now, we still come at a profit, but you're probably leaving all this opportunity on the table, and then you deal with your investor proudness, why I'm not doing this, why other people cannot do it, I should be able to do it. But then you have to also accept your limitations. Do I have time to do this, or do I just need to just conclude that episode and then focus where I'm really good at?
I think there's a perfect blend of like shaping your network around you that can do both inspire you and hold you accountable in the things and kind of check you a little bit. So inspire you, hold you accountable, but check you in the things where it's like, dude, I might not take that on. Like that's a pretty big gauntlet that you might not be prepared for in regards to the historic districts and stuff. I think you've been in the group, in EIMG since about the beginning. I think you were one of the OGs.
When I joined you, we were still doing all these meetings in somebody's living room. You know, you were choosing a house every single day, and you know, going to how we met. You know, that was a market peak. You know, I put that property for sale myself. We had 11 offers. Yeah. But the way, and I like to talk to everybody. You know, like this a little bit about me. Like I like to, hear people's stories, also the pitch. You had this idea about the scaling. Your offer being, always a little bit higher than the next higher offer that I had, and I got a big sense of fairness. That's one of my things. I like to be fair, and I go out of my way to be fair on that deal. And I think I talk to you and say, hey, I don't want to put that that into everybody's bid. Just give me your highest bid. But what I like about our conversation, it was your vision and it was aligning with what we're doing. At the end of the day, as an investor, I think you always have to be. You have to live by numbers, but you also have to have a model. Like, what's going to be your business model? Yeah. My business model is, how do I add value to a property, but also how I am fair throughout the process with my sellers, with my contractors, with the people that work with me, with my tenants. That's how we got into the rental business. And you have to have those little things because just money sometimes it's hard to navigate it. You have to have something else that gets you moving every day in that aspect.
Yes, sir. I think I was not the highest offer.
Not at the beginning, but when we discussed, you probably were just by a little bit. Yeah. I did have 2 higher offers, value-wise, 20,000 more than where you were. Yeah. But there were too many risks. Yeah. And that's the part you also have to analyze is, sometimes you chase the last dollar. But, will that really make a difference in your overall strategy and your overall timing? And, I chose right because, look at us, 4 years later, the exposure that I had in this group, through everything that I participate, it's, there's a part in one of the books I've been reading, The Millionaire Real Estate Investor by Gary Keller. But then there's one part that says model success. Yeah. How do you model success if you're not involved and meeting people, throughout your network that really can, you can identify as being successful? Yeah. This CEO group that we are, I'm looking there every day. I'm like, I see them, so far ahead in some of the things that I'm doing. I'm like, I don't mind. I take notes. I'm like, okay, I want to do what he's doing. I want to, be like Lindsay and develop all these models and processes and be so sharp at it. It's like, you have to be humble in this business as well. Yeah. We make mistakes. Real estate, it's a long journey. You have to see it that way. I think a lot of people have been spoiled throughout the last years with success. And I think the biggest responsibility now as real estate investors is that the new generation, we have to make sure that we present it with the full picture. It's not always a profit, it's not always buying a property here and making money the next day or in a month or 2.
Yeah, it's not all roses and rainbows. Man, I'll tell you, a lot of people in the flipping space got caught with that over the past 2 years. So just for reference, in Tampa, you could have bought any property in 2021 and spent a year doing nothing basically and sold it and made money. Yep. Like 2021 to 2022, you could do that. You could get away with it. You'd be like, I am a great flipper. I'm flipping a new house each month. We're super profitable. In 2024, you buy a property and it takes you 8 months to rehab and you're dispoing it in 2025, you're putting it on the market. If you're not lights out on your finishes, the scope of work that you did, including everything, a full renovation, if that's what the project required, you're gonna get caught. And if you only underwrote a $30,000 profit, we'll be back to the show in 1 second. On schedule, on budget, and quality service. Those are all 3 critical factors that we look for in any trade that we work with, and they're the reason we like to align with CXR Solutions for anything contracting, plumbing, or mold remediation related. We love working with them, and we want you to be able to work with them too. Check them out in the description below. $30,000 profit in this market becomes negative really fast.
This is, I was talking to somebody else the other day. This is the first time in the last probably 10 years that I'm seeing more and more negative cash flow on rental properties. We're getting a lot of more customers on my rental side of the business where we do the tenant placement that, they just bought properties with the idea that things are going to appreciate it. and then you can rent it for, for the next 1 year or two.
Yeah.
But rents are not there anymore.
Yep.
We had this huge oversupply of properties this year for the ones that were not selling. We got a lot of customers that had 120 plus days in the market, and I call them forced landlords. Like suddenly, hey, I gotta be a landlord now for the next year or two until the interest rates come down.
Yep.
But not all of them are cash flowing positively.
Yeah. Even the property that we bought from you, when we first bought it, we put it up on the market for I think 1,600 or 1,650. We got 1,600. This was in late 2021. Mm-hmm. Now it rents on that one side for the same.
Yep. I'm seeing some properties 20% drop. I do rentals myself, and I have 2 properties right now that are not renting.
For reference, though, when we took that property over, this is what's crazy. From 2020, we inherited someone else's lease that was there, and they were staying.
Yep.
From 2020 to 2021, their lease, or I think we look back at the lease records, it went from like 1,200 in 2019
Okay.
to 1,600, 1,650 in 2021. I mean, it increased like, what is that, 33%, between 30 and 40% in like 2 years.
Yep.
And then now we're seeing just cataclysmic, like plateau and decline.
So what happened in that area is that you were able to push those rent higher, in my opinion, because you had all these new apartment complexes finally being developed. So you got a new higher price. So they were at 1,800.
Yeah.
You were 1,600. That's still a very good difference. What happened now is, or a good spread, is that you have more apartment complex being built, and they have amenities. And so now you're finding with a different animal, which is you have a lot more supply than what you had in the past.
Yeah.
We're struggling with some of the properties around, areas that were underserved, like, University of Tampa and so on.
Yeah.
But I think it's mainly because right now there's just an imbalance between the supply and the demand.
Too much supply, not enough demand.
That's correct.
Let's go into your tenant placement business. So you didn't used to do it for others. Kind of, if I could paraphrase a little bit about your business model, you used to have a really dialed in, and you still do have a dialed in process for yourself to place tenants.
That's correct.
And it seemed like people started to ask about that or how to replicate the result that you were getting. And you just thought one day, why don't I just create a business that does this for other people?
That's correct.
So how did that kind of play out over time?
I think we got, that was back in 2018. So we created this company to service our own rental portfolio.
Yeah.
And then through through network, you start talking to people. Then I start finding that there were a lot of landlords that they had, or investors that have maybe 3 or 4 properties.
Yeah.
And then we start sharing stories about, my process and the areas. And the biggest part was the difference in terms of returns.
Yeah.
Because mine was more of an analysis of what the market is paying. So they were getting, $3,000 for the property. I was getting $4,000 for mine. And they were like, whoa,
Yeah.
why? Oh, because yes, you have the statistics, this is the data, this is what you have available, this is the product. So long story short, we were approached and say, hey, why you don't help me doing the tenant placement? I want to manage them themselves. So we found this niche over the last years of investors that they want to save on the management, but they need assistance on the market analysis, the tenant placement, which is the most tedious aspect.
Yeah.
And I think the biggest value is that we approach this like it was our properties, meaning we meet every single tenant applicant. Like we don't do log boxes and everything else, because we feel this rental business has to be a long-term relationship.
Yeah.
And the only way you can do that is actually meeting somebody, how they behave, who they are, what they want about the property, what they're moving. And I think that's probably one of my biggest strength is I like to really focus on the tenant aspect, but I need to balance more the landlord as well.
Yeah.
I was talking to you the other day, but now there's just so many profiles of landlords, and things are getting more complicated business-wide.
Yeah.
You're going to be seeing landlords trying to cut costs because they have to. We're being pushed in many different ways. Property taxes are higher, insurance is higher, rents are coming down, and if you have a mortgage that is high or have maybe a variable rate, you're going to be on the negative side. What exits do you have? Oh, I'm going to sell my property. It's not really happening. So they will have to find ways to cut costs. We have done it also ourselves. Back in the day, I offer cleaning service every month included on my rent.
Yeah.
Now I have to be selective to what property I can do it and which one I cannot.
Yeah.
So again, this business model grew from just maybe a few people here and there Now we're working with a couple of builders that are building to rent.
Yeah.
And then we're doing all their properties. And I think the biggest benefit at the end of the day is that, they're being part of the selection process without having to do the work of going every single day and trying to interview, every single tenant that we have.
Yeah. It's probably not the thing they're good at. It's the thing you're good at.
Or maybe it's very time consuming. So my team has grown, 5 times since we started.
Yeah.
We're still in line for 150 properties this year, but it's taking a lot more days on market, to be honest. I think on average we're doing 29 showings.
Yeah.
Just to lease a property.
29 showings to lease one unit?
Yeah.
That's crazy.
That's a lot.
Is that, and you meet every single one of them in person?
We meet every single one in person.
Are some multiple showings?
Yeah, we try to coordinate as much as we can, but there is a couple that you might do maybe 2 or 3 the same day.
That's incredible. 29.
It's a lot of work.
Mm-hmm. Wow.
But on the positive side, the eviction ratio that we have is almost none. I think we only have one property that it was a third party that they had to evict the guy because nothing that was on the application. He just had a situation throughout his lease with the law and he had to get evicted. So until then, our process has been really foolproof, and I'm knocking on wood on that. It just takes time to really select those tenants.
Yeah, yeah. What do you think has you most excited about in terms of real estate investing and opportunities that you're seeing?
I think right now it's seeing some of these neighborhoods transform.
Yeah.
We're trying to get into something that I'm taking my time, but I need to do it, which is new construction. I'm very excited to get along with that. But my business model is different from most of the investors out there because we're looking at building to rent because we have already a rental portfolio.
Yeah.
And we are in a way vertically integrated. We have the rental team and then we have the property management team.
Yeah.
We have the knowledge, but we don't have the knowledge on the new construction side. So I think I'm very excited to see how some of these neighborhoods transform, especially West Tampa that we are been discussing for a while. Palmetto Beach, I think is well behind, its schedule. But I also want to see some new construction technologies in there.
Yeah.
Very funny story, but the name of my company which is Earth Home,
Yeah.
was with my idea about sustainability. I seen different projects throughout my trips and my travels where I like to see in Florida as well, in terms of energy efficient, in terms of materials and so on. But I think right now we are in that point of cost versus product, and you have to find the right balance. Maybe it's not the right time to get into something.
Yeah. Yeah. What has your experience been like as an immigrant into the United States? I can't even begin to imagine or put myself in that position.
It builds your personality, and I think throughout the years it makes me stronger that, when I see a problem, I have a problem. Like I told you the other day, it's like, when I got a problem, I look at that as an opportunity. I try to find a way to turn that into something that I can relate me to that person or to that specific situation. You get defined on how you react to problems at the end of the day. I moved into the United States back in 2002. So I've been longer in the US than I've been, originally from Ecuador.
Yeah.
I came to university here, and of course, the language part, it's something that you have to continue to work every single day. I'm speaking more Spanish now than I used to do when I was in college.
Yeah.
So when I'm dealing with, people, I'm doing, public speaking or talking to somebody, like it always comes to your mind, it's like my accent. Like, is these people really understanding what I'm saying? So I guess I put maybe more effort on pronunciation or how do I say something that maybe you do on the day to day. Then you have to deal with all these, paperwork and financially and so on. The way my situation was, my parents only had money to pay for 1 year of college.
Yeah.
It was supposed to be 2 because I transferred.
Yeah.
And that was the statement, say, hey, I'm gonna help you for the first year. You need to find your own scholarships.
Figure it out.
You have to find everything, to sustain yourself because otherwise, you have to come back.
Yeah.
And that's how it was. I got my first year in college. I was a 4.0 GPA student because my fraternity at the time was giving me $500 every time I get a good GPA. So I'm like, yeah, that's $500. I have to do it.
Yeah.
And then I started applying to different scholarships. that were meant to be for international students, but the requirement was for you to be a resident or a citizen. And I'm like, but that's a discrepancy. So I have to apply to a whole different set of scholarships throughout academic recognition, maybe getting involved in the community or getting involved in the University of Florida as well. So it was a big push through.
Yeah.
Then you have to find a company that's become your sponsor, 6 years of that, and you have everything in back of your mind. It's like, everything is like, your last chance. Like there's no plan B. And, even with the student, with the work visas, if you get fired, you need to find another sponsor. If you cannot find another sponsor, there you are gone. Everything that you did here, it doesn't really matter. So I guess I treat everything like, there's no plan B.
Yeah.
It is good because it makes you really analyze things that you make the decisions. But at the same time, it also puts you into perspective that, as you go through, then if you have to think about plan B, then maybe it's not the best decision to get into it. You have to have that success mindset. Like that's a big part of the success. It's just the clear mindset.
Yeah.
That you cannot go into something that, oh yeah, it doesn't go right, then I have this option.
Yeah, it's almost like you got to make sure you have the determination to see it through, but you also want to be cautious that your enthusiasm doesn't surpass your actual capability, because if it does, that's where you can get yourself into a situation where it's like, man, I only crafted a plan A and
Yep.
plan B doesn't exist, and now I'm in a tough spot.
I think also as you get older, you start crafting different risk scenarios as well. Now my 40s with family and everything, my risk tolerance is a lot different than when I was on my 20s.
Do you think it's higher or lower?
It's definitely I'm less propense to get into risky stuff now.
Yeah.
I try to control it. Maybe on the stuff that I know probably a bit more, but no, I was all in, when I was in my 20s and 30s investing in real estate, every single dollar that I could, I was putting into my next house. And I was using a lot of that, I was using loans and everything as leverage, but I was trying to always be very cautious. Like the big thing is, it's good to be all in some of these strategies, but you also have to know your limitations. And I think maybe a lot of people get sometimes over leveraged in some investments, and then when things change, you have to be prepared for some of these parts.
I'll tell you, man, I'm not going to mention their names, but I know some extremely experienced investors who you would know their names, who have over leveraged, and it's a very quiet, behind the scenes kind of thing. You're like, that guy did that? Like, are you serious? So, if you're a newer watcher to this show or a newer investor even out there, don't think that at a higher level that you eventually get to, those problems can't catch people off guard too. I think that's a big takeaway that I've seen over the past, especially the last 2 years.
They can get big, they're actually probably bigger than it could be if you're just starting.
Yeah.
It's one of those things that you have to consider, but you cannot be paralyzed by. A lot of these younger investors, it's how do I start, or this is so much money, and they just don't make that first step. My advice is, think big, but start small. And if you start, you don't have to start by yourself. Partner with somebody. The partner part. It's very important. You have to choose your partners too. I've been very blessed throughout my time, but also had a situation where it didn't go the right way, and we learned it. Because then you get so confident or comfortable, maybe if you're working with people that and then suddenly you lack processes. Yeah. And then you bring somebody in, and then that person decides to leave.
Can we explore that a little bit?
Yes.
We don't have to name names, but tell me more about that, because I think
that's a big experience I have.
From the outside looking in, we could look back and say, David, he's an immigrant. He made it all happen for himself, put himself through college. Yeah, he's doing this fertilizer business. Then he created this real estate empire. He's just making all these big things happen.
But it's not only flowers and victories, and this partnership. It's not through my group of friends. But long story short, we had a partnership for rentals. We added, a new person to be a third partner. And we didn't have an operations agreement in place. And things started getting very profitable, I guess, and also the valuation of that portfolio grew pretty fast. Okay. And I think he has his personal interest at that time to go faster than where we were going.
Yeah.
And he said, hey, I want to cash out. And there was no framework for the cash out. We never thought he wanted to cash out within a year and a half.
Yeah.
So it was a long battle with personalities and interests to try to find the best fair way to cash him out.
Mm-hmm.
At the end of the day, we have to sacrifice a property that was ours. We have to put cash, and the relationship was never, until now, I think never been 100% good.
Yeah.
So, but I think if you have a clear structure, whenever you bring in partners, how you bring them in, how you bring them out, it's gonna save you a lot of money, it's gonna save you a lot of negative situations, and you might be able to keep that person as a friend afterwards. But yeah, that was a year where we had to get appraisals. Like we always work based on CMAs, but suddenly the trust was lost. So you have to hire appraisals to get the appraisal of these values, and then like, no, that house is worth more. I'm like, yeah, it was really negative, I think, throughout. So right now we choose our partners carefully. We do it more on a per project basis. And I think the biggest part is that you have to choose somebody that brings value to your partnership. You know, like I have very good friends that are partners that are on the financial side, but I think we're now on a stage that I need to bring somebody that brings knowledge that I don't have. And I think that's part of all this new younger generation, or the new younger investors, new investors. You have to bring somebody that can add value, not only financially, but also on the knowledge too.
The growth and the victories don't happen without the challenges and the obstacles.
That's correct. You have to, you know, it's, you know, you see in last year with the hurricanes, for example, like how many investors, including myself, we got properties that got flooded. Like, yeah, you might have insurance, you might not have insurance, but dealing with a negative situation suddenly, where you have tenants living in flooded properties, and you have to talk through them, you're losing money because they're not paying you rent, and at the same time you have to put money to repair that house, and you don't getting any insurance money. You don't even know if they're gonna pay you for that.
Yeah.
It's I think it put a lot of people, like, at least it put me on perspective that number one, my safety net has to be a lot bigger than what it is right now. Number two, you know, where you look for properties, you know, areas, you know, what you plan for it. And number three, I think it was a validation that we had some of the systems in place and the relationships to be able to sort through some of these issues.
It's good.
Especially like contractors, you know, handymans and things like that. They're working for us Saturdays and Sundays.
Yeah.
You know, until 9 p.m. because they had also Monday through Friday busy.
Yeah.
But they knew that we needed their help to get through it. So
it's good. It's good. Any closing thoughts from our session today?
I think if I can say something about, you know, my trajectory and you know, if anything I can share it, I think you have to, it's a tough process. You know, being a real estate investor, being in real estate, it challenges you in many different ways. I think you have to really work yourself into your mindset, but you also have to have a clear purpose of why you're doing this.
Yeah. Because
the profitability, the challenge that you're gonna face, it cannot be only related to money. You have to have some kind of purpose besides that. It could be wealth creation. It could be, you know, establish a legacy. It could be fulfillment. In my case, you know, when we talk, you know, it's analyzing your whys. Why are you doing this? And when it gets tough, you know, it's not the only time. You have to analyze it when it's also doing good. You know, why I'm doing this? You know, everything is going great. Am I doing it for the money? Am I doing it for something else?
Yeah.
And that's something that I do daily. Like, why am I doing this? And then the other part is, you have to look everything through, you know, through different lenses. You know, in my case, when I make mistakes, I actually am thankful for them. You know, I'm thankful for them because that's the only way that one of them I can learn, but the other one is that I can appreciate when I'm doing good.
Yeah.
If you don't have the negative part, you cannot really enjoy the positive part.
I couldn't agree more.
And last but not least, you know, I think overall it's you know, get yourself out there. You know, do something that inspires you, that excites you. In my case, it's meeting people. I still go and meet all my tenants when I can, even though a lot of people don't suggest that. But I don't know. That's the only way I can get the feedback of how am I doing as a businessman, how am I doing as a landlord. And at the end of the day, you know, find what inspires you to be in the real estate part.
Awesome. Thanks for joining us.
Awesome.
It's my pleasure. Good to see you.